We have looked at both the parent book and the consolidation worksheet when the parent has less than 100% ownership of the subsidiary. Now let's look in detail at two specific places on the consolidation worksheet. One is after we calculate consolidated net income, we need to allocate it between controlling and non-controlling interest. The other place is the calculation and allocation of goodwill. So let's first look at the consolidated net income. So allocate consolidated net income. The formula, we have already talked about it. So again, the formula here is net income attribute to non-controlling interest is subsidiaries net income, take out amortization, and multiply it by non-controlling interest percentage of ownership. So here, only portion of subsidiaries net income is not allocated to non-controlling interest. So this is easy to understand, right? Because non-controlling interest only gets its percentage of the subsidiaries net income. It doesn't have the whole 100% of subsidiaries own income. So it's like only a portion of. We assume the relative ownership percentage of the parent and non-controlling interest represent an appropriate basis for attributing all elements of subsidiaries income across the ownership group. This just means that we allocate it according to the ownership percentage. Including the excess fair value amortization is based on the assumption that non-controlling interest represents equity in the subsidiary's net asset as remeasured on the acquisition date. So here, as you notice here, we need to take out excess amortization date, excess amortization. So this is based on the assumption that all of subsidiaries' assets and liabilities, those are remeasured on the acquisition date. And subsequently, all of the amortization on those assets and liabilities. So before the acquisition, they have a book value. On the acquisition date, they are remeasured. So if you add up the difference between fair and book value, they are remeasured to their fair value. And then, but on the subsidiary's book, all of the amortization are still done based on the book value. And all of the difference between fair and book value are done on the amortization worksheet. So here, we're assuming that actually what matters after the subsidiary has been acquired, that is when all of its asset and liability, they are remeasured to its fair value. Even though on its book, it's still reporting its book value, but they are actually remeasured to their fair value. So subsequently, their net income. So this net income, it is already taken out the amortization based on the book value. But for this difference between fair and book value, they also needs to be amortized. And this difference is taken out here. So subsidiaries net income doesn't include the amortization for the part which has a difference between, which is the difference between fair and book value. That the amortization on that part is not reported, it's not included in subsidiaries net income. But actually on the acquisition date, the subsidiary is remeasured to its fair value. So we need to take out amortization when calculating non-controlling interest share of subsidiaries net income as well. So this is the logic for taking out the excess amortization here. Let's look at an example. Parker owns 90% of Strong. In the first year, Strong reports revenue of $280,000, expense of $200,000. There's $30,000 annual excess fair value amortization. What is the amount of net income attribute to non-controlling interest on the consolidated income statement? So what is the amount? Please take 5 minutes, try to work on this example, and you can pause your video for now. So Strong reports revenue of 280, and then take out expense of 200,000. So that is 80,000. That is Strong's net income. And this net income, we need to take out 30,000 amortization, multiply by 10%, which is the percentage of ownership of non-controlling interest. And this will give you 5,000. So this is the net income attribute to non-controlling interest. So here is the solution. So this is the first place I want to talk about how to allocate consolidated net income. And in next class, which is the second part of this chapter, we're going to talk about how to calculate goodwill and how to allocate goodwill.